This episode was co-produced by SICTIC, the leading Swiss angel investor club, which connects smart money investors with innovative and highly scalable Swiss startups. SICTIC has published the Swiss Angel Investor Handbook, packed with the best practices for people that want to learn how to invest in early-stage startups and avoid common pitfalls. It's also a useful guide for startup founders that look for angel investors. Go to angelhandbook.ch to get your free copy. Again, that's angelhandbook.ch.
Unlike a professional manager, a startup entrepreneur truly has skin in the game. And that usually leads to different behavior, willingness to take risk, and 200% commitment. But even with that old passion, failure often comes from the similar mistakes: lack of focus, wrong priority, and misreading the market.
Welcome to the Swisspreneur Show, a podcast about startup stories and learnings from experienced entrepreneurs. If you enjoy listening to our show, make sure to follow the podcast and leave a rating. And now, here's your host, Merle.
Well, hello and welcome to Swisspreneur. Another episode today of your podcast where we dive into the world of entrepreneurship and spark ideas for the next big thing. Today we've got a special father-son duo as guests, specifically Mao and Felix. So Mao, let's start with you. I heard you came to Germany from China in 1982 as a student and then moved to Switzerland. What was behind that decision?
Thank you, Merle. In 1982, I come to Germany to study electronic engineering at Bochum University. Back then, I was a young and curious student. 11 years later, in 1993, I moved to Switzerland and worked for Sarah. The business-friendly environment and the Swiss spirit of independence and freedom has a crucial impact on my mindset. While Germans tend to value stability, the Swiss prefer self-determination. From there, I began exploring new ideas. Looking back, moving to Switzerland was the most important step in my life.
Yes. And Felix, you actually grew up hearing these stories from your father, of course, but you've got your own path. You're an economist and now you're rocking it with SICTIC's Next Generation program. How did you actually get hooked on startups?
Thanks, Merle. I guess I couldn't escape my father's stories. Economics taught me how markets work, but it was through completing internships at a nutrition startup and another leading Swiss business angel club, the Business Angels Switzerland, abbreviated as BAS, that I got hooked on startups. SICTIC's program has been a total game changer. I get to meet driven founders. I can learn from experienced investors. It's like jumping into a world of bold ideas and incredible energy.
I love that enthusiasm. Today we're diving into your startup stories, investor network and clubs like SICTIC, and how the next generation is stepping up. So Mao, you've built an impressive career, consulting, ventures, you name it. So you jumped in, and by 1995 you started Untitled, which is your consulting company. And you even launched a venture in Beijing, back in China. So tell us about those early days and how you balanced consulting with these big ideas.
In 1995, I founded Untitled, a consulting firm, and gained my independence. I divided my time carefully, half for consulting, helping my clients tackle challenges, namely replacing managers, turning business around, buying, selling, or even closing companies. The other half for my own ventures, following my dreams. In 1996, seeing the Chinese economy booming, I launched a company in Beijing to manufacture armored vehicles for money transportation, the first ever in China. Consulting gave me steady cash flows to support my family. But this venture brought me the real satisfaction.
That's super interesting. So you were navigating both consulting and your own ventures in a growing market like China. What were some of the key challenges that you faced in those early consulting projects?
In my early consulting days, I helped European firms set up new companies in China. And quite often, I was brought in to turn around failing ones. Back then, European companies had a strong position, strong finance, and leading in their technologies. On paper, they looked like the perfect starting point for every venture, dream condition for every startup. But many of them failed in China, not because of technology or lack of funding, but entirely because of human factors. That realization led me to start an HR consulting business around 2000. I focused on recruiting top managers for European subsidiaries. And that became my first key to success, the right people.
So you've gained deep insights into what makes or breaks a business basically through that time. And as you saw the landscape change, how did you adapt your strategy?
After hundreds of projects, I gained a lot of experience across many industries. As a consultant, I had the opportunity to start many companies and to understand why they failed. This gave me insights without risking my own money. It helped me to avoid repeating the same mistakes. By 2010, I saw signs of withdrawal of Western companies from China. So I launched a creative service, buying struggling Chinese subsidiaries and liquidating them gradually over up to 5 years with extra patience. This allowed the parent company to exit immediately and cutting themselves off at once from suffering and risk. That approach led to closure of around 20 companies, business that just a few years earlier had been celebrated as success stories. It turned out to be good business, to be honest. It always left a bitter taste. I was closing companies that others have built with great hope.
I can imagine. And I mean, working in China and Switzerland, you've built an impressive, also cross-cultural career across multiple industries. When you, as you mentioned also, when you stepped into these troubled companies, what was your typical experience?
In most cases, I found management helpless. Human and financial resources have been really wasted. Companies lack flexibility to adapt to change or to respond to competition. Their strategy is often flawed, developed without a real understanding of the market. And very often, there are no proper check and balance. All the decisions rest with a single person, which can easily lead to dictatorship and even worse, to corruption.
And with the benefit of hindsight from your work and business turnarounds, what insights can you share on how entrepreneurs might avoid the failures that you frequently encountered?
Unlike a professional manager, a startup entrepreneur truly has skin in the game. And that usually leads to different behavior. Willingness to take risk and 200% commitment. But even with that old passion, failure often comes from the similar mistakes. Lack of focus, wrong priority, and misreading the market. This can destroy even the most promising ideas. In addition, weak salesmanship and failure to inspire, momentum can be lost quickly.
So then later in Switzerland, you joined the investor network and here the club SICTIC after 2 decades of consulting and entrepreneurship. How has SICTIC specifically helped you to find exciting projects and grow further as an entrepreneur?
SICTIC has been very helpful, Mela. I joined around 2017. after more than 20 years in business, and it really opened new door for me. The platform connect me with founders, investors, and exciting projects. Through SICTIC, I got involved in venture like Medmira, we will talk about later.
So you've seen projects globally. What, in your experience, makes Swiss startups and also a network like SICTIC special to you?
Swiss startups stand out. They combine excellent technology with a realistic roadmap. Many focus on solving real problems, not just chasing trend. SICTIC plays a key role here. Its rigorous evaluation process and broad deal flow mean that only high-quality projects reach investors. I have attended pitches all over the world, from Berlin to Shanghai, often through video calls. And my gut feeling tells me Swiss startups have a higher chance to succeed. Of course, every ecosystem has its own flavor. In Switzerland, the society is very business-friendly. Swiss are proud of doing things properly. Founder here may be low-key, but once they commit, they deliver with Swiss precision. SICTIC's structured process and strong network help turn ambitious ideas into outstanding companies.
And talking about this network, and like we mentioned earlier, we want to talk about also how we can motivate young generations to invest. And the Next Gen program that we mentioned actually came out of a conversation that you had with SICTIC president, Thomas Dübendorfer. Can you tell us about that conversation?
It began just with a one-line email to SICTIC president, Thomas Dübendorfer. Could my son attend the next investor day? Thomas replied, of course, let's open our club to young people. A few days later, the SICTIC team presented the Next Generation program. That is what I love about this community. See a good idea and act fast.
And if I may add, at SICTIC's 133rd Investor Day, which fell on Switzerland's Zukunftstag, SICTIC assembled a small jury of entrepreneurial teenagers to create the first Next Generation jury. They rated the pitches, asked sharp questions, and handed out the Next Generation Best Startup Pitch Award.
I think that's such a great opportunity and also a brilliant idea. And Felix, thank you for bringing the Next Generation vibe into this story. Because unlike your dad, you didn't start with engineering, but with a passion for economics and history. And then you went into consulting. So I'm really curious to understand, how does the study of economics help you when it comes to investing?
Thank you, Merle. Unlike my father and brother, I had no interest in engineering. I was more interested in people than things. I studied economics because I was fascinated with applying precise mathematical models to something as complex and messy as human thinking and behavior. During my studies, I focused on behavioral economics, which is the branch of economics that deals with how people actually think and behave, as opposed to what a rational Superman would do. Now, when it comes to investing, economists have a very mixed record. Irving Fisher was one of the most renowned economists of the early 20th century. On September 3rd, 1929, he declared that, quote, stock prices have reached what looks like a permanently high plateau. 3 weeks later, the stock market lost 36 percentage points within 5 days, and the worst global recession in history unfolded, the Great Depression.
That's what we call an unfortunate turn of events. Are there any ways in which economics can improve investment decisions?
Thank you for giving economics a chance to redeem itself, Merle. What the study of economics teaches you is a conceptual understanding of the world rooted in the tenets of rationality. And by abiding by these tenets, it is possible to avoid pitfalls in investing. Considering the soundness of an argument in favor or against an investment, the rough probability of success given the investment data, adjusting these probabilities in light of new information, thinking about risk and reward, distinguishing between correlation and causation, things like that.
So to an ear that doesn't know a lot about what you're talking, this sounds quite abstract. Can you give us concrete examples?
Sure. Think about Warren Buffett's purchase of American Express during the 1963 Salad Oil scandal. A small Amex warehouse unit had promised that barrels of soybean oil were in storage, but most of the barrels held seawater. When the fraud came out, the share price was cut in half. Before rushing in or out, Buffett asks a down-to-earth question. How often does a well-known payments brand like Amex actually go under because of one bad episode? The prepaid cards of their day had been popular and profitable for years, and only 2 other companies were on the same global stage. So the odds of Amex still thriving 5 years later looked very high. Next, Buffett tested whether customers had lost faith. He went to Omaha restaurants and quietly counted how many diners still pulled out their green Amex card. Most people did. That simple observation told him that the public's trust was intact, even while the stock market was still panicking. With proof that the core business was unharmed, he felt safe, buying a great company at a bargain price.
So you're saying that Buffett invested into American Express because he followed the tenets of rationality?
I am not saying that Buffett opened a dusty economics textbook from his time at Columbia University when the stock price collapsed. But I am saying that what he did was in line with the tenets of rationality. Now, to get the full picture, one would have to check for all the investors that applied the tenets of rationality as well, but who failed. But that's for another day.
I think it's super interesting to see how economical theories can actually bear real fruit. And we know economics is just as brimming with empirical studies as it is full of theories and models. And just to explain, empirical studies are when researchers learn about something by actually observing it and measuring it, experimenting with it in the context of the real world, instead of just thinking about it, hence theoretical. So how might an empirical perspective also inform angel communities?
Good question. Merle, we Swiss measure glacier retreat to the centimeter. Yet in angel investing, we still work mostly from anecdotes. To be fair, partial data sets do exist, but they are rarely stitched together or analyzed with prediction in mind. A typical study reports the average return from a small survey and stops there, leaving us completely blind to the spread of outcomes and to the forces that drive them.
So what do you suggest that we do about it?
Imagine we pooled, in anonymized form, the key variables from a few hundred SICTIC deals, plus information already held by InnoSwiss or the cantonal banks. Ticket size, sector, founder mix, time to first revenue, nothing fancy. With that base, we could train simple models that forecast the chances a startup reaches Series A, and we could run causal tests to see, for example, whether a second commercial co-founder truly raises those odds, or whether founding teams with previous exit experience reach profitability faster than first-timers. The goal would not be to replace instinct, but to calibrate it. The database wouldn't replace gut feeling, it would sharpen it, give investors evidence-backed rules of thumb, and founders clearer guidance on what really moves the needle.
I love the data approach here, but you just mentioned also gut feeling, and this brings me back to you, Mao. Around 2010, you shifted your focus from China back to the West with a new vision, and you turned to MedTech. Can you tell us how you made that move and what drew you to MedTech?
By 2010, I noticed that the Chinese economy reached its peak, so I looked for new opportunity elsewhere. From everything I have seen across different industries, MedTech offers the highest level of fulfillment. You have to save lives, and the business has a very high margins, protected by very high entry barrier. All this make MedTech very attractive.
Yeah, that makes sense. And How did you find your first MedTech project then?
A trusted friend introduced me to neoplas, a spin-off from the German Leibniz Institute in Greifswald. They developed a cold plasma jet for treating chronic wounds. I saw its potential and invest with partners in 2014. After a Japanese venture fund stepped in and a strong CEO joined the company, I stepped back, waiting for exit.
That's impressive. But then came a bigger opportunity, right?
Yes, that's right, through SICTIC. I learned about Medmira, a Canadian MedTech company listed on the Toronto Stock Exchange. Leading figure in Swiss venture capital business, who I met at the SICTIC event, asked me to help and invite me to join Medmira board.
That's a fortunate turn of events. So what made Medmira stand out to you?
Medmira developed a rapid vertical flow test, which delivered results in under 3 minutes, even including sampling process. The HIV test is approved by the FDA, HIV and syphilis test by Health Canada. The platform is able to detect all different kinds of infectious diseases. We have just to combine the platform with different biomarkers. It is an ideal solution for point-of-care diagnostics.
And I mean, it's super impressive to have a solution that gives you results in 3 minutes. It's a game changer. How is the company performing these days?
I invest my own money in 2019. I was absolutely convinced of its potential. Today, the company has achieved a successful comeback, and we lead the industry once again. While the technology and the innovation are essential, the true engine of Medmira's success is its people. We have a brilliant inventor, a managing partner in the driver's seat, with a clear strategy, relentless drive, and personal commitment. Thanks to the team and the support of main shareholder, Medmira has weathered major storms, adapt to big changes, and push forward with every opportunities.
It's another fortunate turn of events, I would say. Impressive turnaround.
Buying Bitcoin has never been this easy. Thanks to the Relay app, you can buy Bitcoin with a bank transfer or a debit and credit card within a minute. The great thing about Relay is that you are the sole owner of the Bitcoin you buy, as you're always in control of your funds. You can also set up a savings plan to buy Bitcoin automatically every week or month, or buy it fee-free for up to 100 Swiss francs or euros each month. Take control of your future today by downloading the Relay app in your app store of choice and use the code SWISSPreneur to enjoy 10% less fees. That's SWISSPreneur in all caps. A quick disclaimer, Relay services are exclusively recommended for Swiss and Italian residents.
I always wonder, specifically with companies that are big and grown and have been there for some time, how do they maintain, and in this case, how does Medmira maintain its innovative edge?
Yeah, absolutely. We are pushing boundary with our latest breakthrough, the so-called TP non-TP test for syphilis. Represents a global first. It can distinguish between active and passive infections in a single test, delivering lab-grade sensitivity and specificity at the cost and convenience of a point-of-care rapid test.
That's very impressive. And it seems like SICTIC really plays a key role in identifying promising projects like this.
Definitely, SICTIC excelled at forging connections through its events and networks, linking investors, venture funds, founders, and experts. This gave me the ability to uncover hidden gems and act quickly.
So SICTIC and angel communities in that sense support both founders and investors, like a patron of artists in ancient times, you could say.
Exactly. Startup entrepreneurs are modern-day artists,
Yeah.
crafting masterpieces from bold ideas. Think about this. Some of the most revolutionary inventions like radar or jet engine were born out of survival instinct during the wartime. Today, major breakthroughs come from the passion and vision of creative entrepreneurs. SICTIC acts as a mentor, supporter, and investor, providing smart money through expertise and network to help those modern artists succeed.
So from armored vehicles to rapid HIV tests. Well, thank you for walking us through that journey. And you just now mentioned expertise and network. And these are also things that are not only important to startups, but also new and young investors. And we already mentioned the Next Gen program, but I also want to understand what exactly is the benefit and how it can motivate young minds to invest. So maybe Felix, what has it been like for you, and how is it maybe also shaping your view of entrepreneurship?
It's been amazing. I'm the first in the program, and it's like diving into a pool of energy. I meet founders who pour their hearts and souls into their ideas, and investors who've built companies themselves before. So far, I've done data analysis, market research, just all things that have to do with due diligence. It's hard work, but it's never dull. I've learned how risky startups are, but the team makes or breaks it. A great entrepreneur can turn an okay product into a hit, but a weak one, even a great product can flop. SICTIC's network keeps me updated on tech trends and passes on wisdom from professionals who made it. It's the perfect place to grow.
And have you also seen that it opens other career doors when you immerse yourself early on, specifically in an angel community?
Next generation members gain a unique perspective into the Swiss startup ecosystem. They see the other side of the coin, because typically during adolescence and in your 20s, you only get to see the startup's point of view. Joining an angel community early on opens pathways to roles in venture capital, corporate innovation, or even launching your own startup. And it goes without saying that the network sticks for life.
And what about beyond career opportunities?
There are a host of additional advantages, right? So you gain early access to high potential deal flow. You learn to perform rigorous due diligence. You cultivate a disciplined mindset around risk allocation, portfolio diversification, and valuation. And all of this while your age affords you the freedom to experiment and also recover from inevitable missteps. You build credibility and a track record that can unlock even broader opportunities. By immersing yourself in this kind of network, you accelerate your professional growth. You are granted mentorship and excellent sparring partners for your own ventures. And last but not least, you get to work together with inspiring founders and work towards achieving this common goal. Think of it as boarding a ship that embarks on a thrilling journey to uncharted territory.
And based on what you've seen so far and what you've gathered, do you have any tips for spotting a promising entrepreneur?
I'm still learning. No magic formula yet. But I've noticed things like leadership, salesmanship, and being able to adapt fast. They matter a lot. Not every founder has it all, but a good team can fill the gaps. Ask any experienced angel investor, and they will put the team above the product. I have studied those personality assessment tools, which are based on a widely accepted model in personality psychology, organizing personality traits into 5 major dimensions. This could be actually helpful in obtaining a more comprehensive of how the team members tick. Could be useful for due diligence, now that I think about it.
And from one next genre to another, do you have any tips?
Yeah, I have a couple. So first, attend the SICTIC Academy. Second, read the Swiss Angel Investor Handbook. Third, watch all pitches. 4th, go through the SICTIC's YouTube channel. It's packed with value. 5th, ask lots of questions. 6th, start small and be humble. And my final tip, listen to the Swisspreneurs podcast.
What a fantastic checklist. I love it. So after a next gen listener has done all that homework, it's crossed off all the things on the checklist, what unique edge can they bring to the table, would you say?
I would say, don't be afraid to bring in a fresh perspective. You are uniquely positioned to synthesize the experience and wisdom from the older generation with the enthusiasm and awareness of your generation. Your tech savviness makes it easier for you to understand the technical side of a product, for example. You are open-minded and can discover new niches and neglected customer segments. Your global outlook makes you look beyond local markets. Your environmental consciousness can align with ESG investing. And also, finally, your sensitivity to mental health encourages better leadership.
Really good points. Very, very important. I think also very motivating, I hope. And as for wrapping up, we, of course, want to look forward and also what's in the future for each one of you. So, Mao, you're nearing retirement and you're still all in with startups and SICTIC. So what is next for you?
As I approach official retirement, my passion for innovation is still strong as ever before. SICTIC keeps me connected to the latest technology and ambitious founders. While my time is limited, I'm still looking for promising projects. So that is why I championed the SICTIC Next Generation program, where Felix has really thrived. Entrepreneurship demands both courage and humility. The longer I am in this business, the more I admire those who take risks to create real value. Recently, I joined Global Scope, global M&A alliance with 55 members across all continents. It is a fantastic network, full of energy and opportunities, not just for traditional M&A work, but also for supporting new companies. I can use my international connections to help young business expanding globally. I won't become fully retired, just semi-retired, whatever that means. As long as my health allows, I will be active. I am also serving on few boards, just to stay connected with real-life business. After 40 years in a high-speed rally, it is impossible to come to a full stop.
I can imagine. And Felix, you are the next generation. So what's your vision and how is your network also helping you get there?
I still have so much to learn, and that is exactly why I value the next generation track. Through SICTIC, I can contribute time and analysis to real deals, work alongside seasoned angels, and see firsthand how founders turn plans into products. My near-term goal is to keep sharpening that judgment so that when the moment is right, I can join a syndicate with a modest ticket and genuine insight. Skin in the game is not only money, it is effort and accountability.
Well, that's the spirit of entrepreneurship right there. So final thoughts for our listeners dreaming of their own startup or maybe joining an investor community?
Building a startup is a long journey. It requires the willingness to always go the extra miles. The potential reward, economic success, and personal fulfillment is enormous. Surrounding yourselves with strong community like SICTIC, where you can learn, stay inspired, and connect with startup entrepreneurs, some of the most courageous and sharpest minds in today's society. If you are passionate, ready to take risk, and fanatic about your idea, then it's time to start now.
Jump in. SICTIC's Next Generation program is a great way to learn, meet amazing people, and maybe make something big happen. Dream big, work smart.
These are perfect words to end on, but not before we finish off with our rapid fire questions. I'm excited about this one. It includes many great resources for our listeners. So first question to you, Felix. One particular podcast that every aspiring investor should listen to?
Episode 135 from the Swisspreneur podcast with Thomas Dübendorfer, where he explains the ins and outs of Swiss angel investing.
I love that you know that number. And the fun fact, there is also coming out a new one with Thomas very soon. And to you, Mao, what is one book that helps you think more clearly?
Fueled by Randomness by Nassim Nicholas Taleb.
Felix, during what time of the year should a startup not pitch?
Before the summer vacation and before Christmas.
Fair enough. And Mao, what are 3 core soft skills that a startup team should definitely possess?
A strong salesman, empathetic leader, and a healthy dose of fanatism.
And last but not least, Felix, any more tips for startups?
Make sure to not only pitch in Zurich, but crucially also in the Romandie.
That's a very good tip. So from building armored vehicle companies to building data-driven decision tools. Mao, Felix, thank you for sharing your stories and showing us why entrepreneurship and investing into it is so exciting. So thank you so much. And to our listeners, check out all these resources and, of course, SICTIC's Next Generation program. And well, then I think kick off your startup journey. Thank you so much.
We hope you enjoyed today's episode. If you did, you can support us by rating our show on Apple Podcasts. This way, we can reach an ever-growing number of aspiring entrepreneurs.